Your bank account is likely to be your first financial product. Either your enthusiastic parents open an account for you when you were a little kid, or your employer will ask you to open an account so that your salary can get credited. Your bank account is actually dressed like a service which keeps your money safely and allows you to use it for the various things that you want to buy. But you know what it really is? It's actually the bank's borrowing from you. You are lending the money that you leave in your bank account to the bank. The bank is using this money to make other loans. So you have to be very careful about which is the bank you choose to transact with. The bank is your borrower, you are the lender, you will want to check out the facts. You need to worry about three things. First, you want to ask who owns the bank. Is the bank run by somebody who can bring in money, who can support the banking operation, and who has the reputation for financial dealings? Second, you want to ask how is the bank using the money that you are providing it. In other words, you want to look at the quality of the loan book. The bank could be government owned, the bank could be a cooperative, but if you find that the loans are not being done carefully and they're going bad, you have to worry, because the bank can default on the payments to its lenders if its books are bad. Now, this is not very complicated as it sounds. If you really want to dig deep, you can go to the RBI website, look at banks and see who owns them, what is the capital, what is the loan book, what is the non-performing asset or NPA, or you can learn what to avoid. When in doubt, you have a choice. Do not choose a bank where you have a problem or a worry about the quality of the loan book or the quality of ownership or the eagerness to access your money. When you have a bank account, the bank wants to understand how much of your money is available to them for use. So how the bank will treat you will depend on these balances that you keep with the bank. Now, what the bank will worry about is how these two things are balanced. How much money are you leaving in your account, which the bank can use, and how much does the bank spend on ensuring that you enjoy a good service. So the bank will be setting up technology solutions such as the internet banking services, mobile banking services, ATM. All of these cost money. Now, the bank will find out whether the money it spends on you is worthwhile based on the amount that you keep as balances. So while paying interest on the balances that you keep, the bank will decide what kind of customer you are, what category you fall in, and how these services will be made available to you. So you have to ensure that all your transactions with the bank are in line with the segment in which you fall in. You can use your bank account to do a range of things: invest, save, receive your incomes, pay your bills, take your loans, and so on and so forth. So this whole range of services that the bank provides you will critically hinge upon what kind of balances do you have in your bank account, because that is your worth to the bank. How will you use your bank account? The first thing you want to set up is your internet banking facility. If you're still issuing checks, you saw yesterday. These are the dates of NEFT. So you set up your internet banking account and set up that whole list of beneficiaries: your landlord, your parents, your perennially borrowing friends, and everybody else who you think are going to get your money. So set them all up as beneficiaries. Set up text alerts for transactions on your bank account. Get your ATM card, receive the PIN, change the PIN, you're set. So you have the internet account through which you're making payments, you have your ATM through which you're making cash withdrawals, and you have your mobile phone alerting you when there is a transaction in your account. You're good to go. So if your grandfather told you that you must have several bank accounts, he was living in the paper era. In this day of the tax information network, your PAN number which you use to open the bank accounts will help the taxman to bring all your bank accounts together in a matter of seconds. So do not open too many bank accounts. Have one account in which your income is coming in and you know that you can account for what is coming there, and be aware of those Nigerian emails which ask you to transfer money through your bank accounts. You can't explain that to the taxman. So have a few accounts into which your income, your investments, your payments are all set up and you're able to understand what's going on there. And if you opened a zero balance account with your employers, ensure that when you change your job, you close that account. It may not remain a zero balance account after you have left the job. If you had one bank account which you used and developed over a period of time into a place where you receive your incomes and conduct your transactions, there are several benefits. Not only will you be able to use it when you apply for visas, but you can also get loans, you can get pre-sanctioned personal loans, you may be able to use overdraft facilities. The bank will be happy to support you. You must get your borrower to do a little more work for you.